Despite Friday's fall, all three U.S. stock indexes finished the past week with solid gains, as lawmakers agreed to the largest economic relief package in the United States history in response to the coronavirus pandemic, with the Dow experienced its largest weekly gain since 1938. U.S. President Donald Trump signed into law a $2 trillion stimulus package on Friday that includes direct payments to curb the economic blow from the outbreak. The Fed Reserve also launched a series of measures to sustain the economy, including an open-ended asset purchase program. The S&P 500 gave back 3.4% to end at 2,541.47 on Friday. The broad-based index rose by 10.3% over the last week, with the healthcare shares among the biggest gainers. Markets seemed to breathe a sign of relief after the news, but economists warn of a tough road ahead. It's clear that we have entered a recession that will be worse than the aftermath of the global financial crisis in 2009, IMF chief Kristalina Georgieva said. The Dow Jones closed down by 4.06% on Friday to end at 21,636.78. However, the 30-share index posted its biggest weekly gain since 1938, surging by more than 12% week-on-week. Meanwhile, coronavirus cases around the world are still climbing, adding to the uncertainty over when lockdown and quarantine measures will be removed and the economy can return to normal. Despite the market's weekly gains, the major averages were still more than 20% below the record highs set last month. Investors have been dumping riskier assets such as stocks amid the uncertainty. The NASDAQ Composite ended the session down by 3.7% at 7,502.38. Still, the tech-heavy index lost its best week in 11 years, rising by 9.1%. Investors got a glimpse of the virus' economic impact last week. On Thursday, the U.S. Labor Department reported a record 3.28 million workers fired for unemployment benefits the week of March 20. That number easily topped the previous record of 695,000 set in 1982. On Monday, the Dallas Fed said its manufacturing activity index came in at minus 70 for March, far worse than a minus 10 estimate. Tech stocks such as Microsoft, Alphabet and Amazon led the way higher for Wall Street. Last week, Microsoft stock was up by about 9%, ending at $149.70 on Friday. One possible result of the novel coronavirus outbreak is that telecommunicating is now becoming the new normal for a great number of companies. According to analysts, Microsoft is among the companies which are likely to benefit from a rush to working from home. It would not be surprising if Microsoft management were to make a reference in the next earnings statement to how the growth in remote working worldwide may benefit its earnings and hence the stock price. Still, for now, it's still too early to estimate how the coronavirus will impact global economies and tech stocks like Microsoft. Meanwhile, airline stocks have been among the hardest hit by the COVID-19 outbreak. Thus, American Airlines stock tumbled by 10.3% to close at 14.04 on Friday. Doug Parker, the company's CEO, said he expects the carrier would be eligible to get around $12 billion of the $50 billion government aid set to be available for passenger airlines. But analysts cautioned that it could take 2 to 3 years for the industry to get back to normal. The carrier also said it would continue to pull flights from its schedules. In April, capacity is set to drop 60–70% domestically and 80–90% internationally. Then in May, domestic schedules will be cut 70–80% and international flights will be down 80–90%. You were watching weekly review of the US stock market on the InstaForex TV channel. We wish you profitable deals. See you on our channel.